In this video, I'll compare 5 popular Australian gold ETFs listed on the ASX. Let's get straight into it. So here are the 5 most popular gold ETFs on the ASX. You can see each ticker symbol at the top. They all track the price of gold in Australia and are all backed by physical gold held in secure vaults. The first ticker symbol is GOLD, the appropriately named Global X Physical Gold ETF. It is issued by Global X, a popular ETF provider. It's the largest gold price tracking ETF on the ASX by assets under management. The ETF launched on the 28th of March 2003, so it's been around for a while and is well established in the market. Next is ticker symbol PMGOLD, the Perth Mint Gold Structured product issued by Gold Corporation, which owns the Perth Mint in my home city of Perth. Previously called Perth Mint Gold, it was renamed on the 26th of March 2025 to comply with updated ASX operating rules and asset guidelines. Launched on the 9th of May 2003, PM Gold is technically an ETP, which stands for Exchange Traded Product that functions similarly to an ETF. While PM Gold trades on the ASX, it has a different structure to an ETF. It is a structured product that represents a right to gold held by the Perth Mint, rather than a unit in a traditional ETF. Next on the list is QAU, the Gold Bullion Currency Hedged ETF, which is issued by BetaShares, a popular Australian ETF provider. Launched on the 3rd of May 2011, it offers a unique feature. Since gold is globally priced in USD, this ETF hedges against AUD-USD exchange rate movements to neutralize currency risk. The next ETF is GLDN, which is the iShares Physical Gold ETF. It's issued by BlackRock, the world's largest ETF provider. It launched on the 27th of October 2023, making it a relatively new offering. And last but not least, we have NUGG, the VanEck Gold Bullion ETF, which is issued by VanEck, another major ETF provider. Launched on the 5th of December 2022, it's also one of the newer ETFs in the market. I have ranked these ETFs based on the assets under management, or AUM for short. AUM represents the total market value of assets that an ETF manages on behalf of its investors. In other words, it represents how much money has been invested by investors. AUM is important for 4 key reasons. 1. Popularity. A higher AUM suggests the ETF is more trusted among investors, reflecting stronger investor confidence. 2. Liquidity. ETFs with higher AUM are more liquid, allowing investors to buy and sell without significantly affecting the market price. 3. Stability. Larger funds typically have more stability and are less likely to close down. 4. Operational efficiency. Bigger ETFs can better absorb operational costs, which allows them to potentially offer lower management fees, although this is not always the case. Global X Gold ETF tops the list with 4.7 billion in AUM. PM Gold is also quite high at 1.4 billion, while NUGG is the lowest at 126 million. All 5 ETFs are backed by physical gold bullion. So let's go through the backing and structure of each ETF. Starting with Global X Gold ETF. Each Global X Gold unit represents approximately 1/10 of a troy ounce of physical gold stored in JP Morgan Chase Bank vaults in London. They offer direct exposure to the gold spot price. Each unit of PM Gold is backed by physical gold held by the Perth Mint, with a government guarantee from the WA government, which gives it an additional layer of security. They offer investors the right to convert holdings into physical gold, providing a tangible asset option. QAU is backed by physical gold bullion sourced from the National Bank of Canada, stored in secure vaults. It provides exposure to gold prices hedged against AUD-USD currency movements. GLDN holds physical gold bars stored in JP Morgan vaults in London, adhering to the London Bullion Market Association good delivery standards. It offers low-cost direct exposure to the gold spot price without the need for personal storage. And finally, NUGG is backed by physical gold bullion sourced from Australian gold producers, including the Perth Mint, and stored securely. It provides investors with exposure to Australian source gold with the option to convert holdings into physical gold. In summary, all these ETFs offer investors physical gold backing, ensuring tangible asset support. Each one has unique features to suit different investor needs, including varying management fees, currency exposure options, and redemption terms. As with any investments, you should carefully consider your financial goals and risk tolerance. Each ETF charges a management fee, which is an annual fee expressed as a percentage of the fund's net asset value. For example, if we look at the first ETF at 0.4% management fee, for every $1,000 invested into Global X Gold ETF, you'll be charged $4. These management fees are deducted directly from the fund's assets and reflected in its performance, meaning you don't have to pay any out-of-pocket fees. It's already factored into the share price. As you can see, the management fees vary among these ETFs, with QAU charging the highest at 0.59% and PM Gold offering the lowest at 0.15%. All 5 ETFs are domiciled in Australia. This means they are established, regulated, and taxed under Australian law, providing investors with simplified tax reporting and exemption from foreign withholding tax obligations. This structure makes investing more convenient for Australian investors. In Australia, the trading currency of an ETF refers to the currency in which the ETF's units are bought and sold on the ASX. In this case, all 5 ETFs trading currency is in AUD, which means once again, you don't have to worry about foreign exchange conversion fees, and it should simplify your tax reporting since I'm assuming most of you are Australian residents for tax purposes. Although please note, trading in AUD has its drawback in the form of currency risk. Since gold is globally priced in USD, Australian investors face exposure to AUD-USD exchange rate movements. A strengthening AUD can reduce the value of gold holdings when converted back to AUD, while a weakening AUD can enhance it. QAU is the only ETF on the list that is currency hedged to eliminate this exchange rate risk. A currency hedged ETF like QAU may be appropriate if you 1. Prefer to focus solely on gold's performance without currency fluctuations. 2. Expect the AUD to strengthen against the USD, which will reduce returns from unhedged gold investments. Or 3. You want to minimize portfolio volatility from currency movements. Please note, Global X also has a currency hedged ETF version called GHLD, which was recently launched in March 2025. It's similar to the Global X Gold ETF with the added currency hedge. So if you're interested, I encourage you to do more research on their website. Let's now look at how these gold ETFs have performed in recent years. Looking at the 5-year average returns, Global X leads the way with 14.2%, followed closely by Perth Mint at 13.54%, and QAU returned 11.47%, which is lower, probably due to the currency hedge. Since gold is priced in USD and the AUD has weakened against the USD over the last 5 years, unhedged gold ETFs have outperformed. Please note the 2 newest ETFs don't have enough historical data for a 5-year return. Let's now look at the 1-year return. As you can see, all ETFs except QAU delivered around 44%. Again, QAU's difference is likely due to its currency hedge. So you might be wondering why gold has performed so well in the last 12 months. Well, here are 5 key reasons for gold's strong performance in the last 12 months. 1. Record high gold prices. Gold prices have hit all-time highs in 2025, exceeding US $3,000 per ounce and AU $5,000 per ounce. This surge has directly benefited gold ETFs, which track physical gold prices. 2. Geopolitical tensions and economic uncertainty. Ongoing geopolitical conflicts, including US-China trade tensions, have increased market volatility. This has driven investors toward gold as a safe haven asset, boosting demand for gold. 3. Central bank purchases. Central banks in Asia and Europe have been building their gold reserves in response to global economic instability. This institutional buying has pushed gold prices higher. 4. Currency fluctuations. The Australian dollar's decline against the US dollar has boosted return for unhedged gold ETFs. When the AUD weakens, these ETFs benefit since gold is priced in USD. And 5. Portfolio diversification and risk management. During stock market volatility and economic uncertainty, investors seek assets that don't move in tandem with equities like stocks. Gold ETFs provide an easy way to access gold without physically owning it. This makes them attractive for risk management. Please remember, if you're looking to invest in gold, then do it for the right reasons. Don't just chase returns, especially after significant price increases. There is no guarantee it will continue to perform at the same level. Gold is cyclical and its price depends on factors like economic uncertainty, geopolitical tension, and inflation, all of which are difficult to predict. If you want to do more detailed research on these ETFs, you can find all the information I've covered today and more on their respective websites. I would encourage you to visit them and familiarize yourself with how they present their ETF data and metrics. I'll provide links to each ETF's website down below. Each website also offers a fact sheet that provides a handy summary of all the key information about the ETF. Please note, all information in this video is accurate at the time of recording. If you're watching this later in the future, please make sure to verify the details as they may have changed. And quick disclaimer, this video is for educational purposes only and should not be considered financial advice. The ETFs I mentioned in this video are not buy recommendations and are used as examples only. I am not recommending whether you should or should not invest in gold in this video. All I'm doing is presenting the facts and you can make an informed decision yourself. Please note, investing in any assets involves risk and past performance is not indicative of future results. Always do your own research and consult with a professional before making any investment decisions. By the way, if you're enjoying this video and made it this far, comment the word bullion down below so I know who you are. And if you're new around here, what are you waiting for, mate? Hit the subscribe button and join this wonderful community of like-minded people. Also, please consider signing up for my free newsletter, Aussie Money Club, where once a week I'll send you some money tips, major news in the market, or any cool updates from me. And if you want to learn how to invest in ETFs this year, check out this video on screen where I'll provide you a step-by-step guide on how to buy your first ETF in Australia as a beginner. And as always, thank you for watching, I appreciate you, and I'll see you in the next video.